4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. They're both free downloads. Let's get started. G'day traders, Stacey Burke from Stacey Burke Trading. Just a short video review on the NASDAQ and the Dow 30 trades from Thursday, Free Cash Thursday, and just going over and reviewing a simple process. The basic weekly template. Monday, the opening range, day 1 in the new week, new timing cycle. Tuesday, I look for range expansion opportunities. Now, if we're up high or we're down low, we're beginning of a new month. Those range expansion opportunities may come on the front side of a new month if we're expanding the range. If we're up high or we're trapping volume up high, we may not see that range expansion opportunity. The last 2 Tuesdays, we've had range expansion opportunities. Wednesday, the midpoint range of the week, in reset signal, and then looking for range reversal opportunities. Now, I've mentioned in the last few videos regarding the indexes, if we look at long term on the NASDAQ and the other indexes, the thesis generally is that over time indexes will go up. Now, we can have down months, we can have down years. But in the bigger picture, when we're using our higher time frame in the daily charts, if we're making higher highs and higher lows, just trying to counter trend a market because we get a down closing day is where traders can get trapped onto the wrong sides of the markets. Now you can go back, we did this in the last video, but we can take a long-term look at the NASDAQ, for example, and on a monthly chart, we can see that we continue to go higher and higher. Again, we can have down closing months, we can have a down year, but indexes generally over time have a lot of retirement fund money going in, investment funds, hedge funds, mom and pop investors, etc. And these markets typically over time tend to go up, which means that my bias over time can look for buy low opportunities if indeed they present. We had PPI and the US equity markets open every day, Monday to Friday, 9:30 a.m. New York time. And we talk about the 10 a.m. club. We had PPI being released at 8:30 New York time this morning. But let's just go back and look at our week. Thursday formed our high of week level, and we start our new week. Now let's just look at some simple things. We can look at the high-low of the entire day, and we can look at the high and low of the New York session on Monday. The high and low of the New York session on Monday is our opening range. We haven't broken any weekly levels yet. We haven't closed in breakout. We're still inside of Friday's range. Now, typically, we can see this as a range expansion on Tuesday, day 2. But when our New York session opens on Tuesday, our New York session pins down during that session, during the 9:30 a.m. till 4 p.m. time, and we make a higher high, before closing out the day. That becomes our opening range and initial balance now. And I keep emphasizing the importance of that because this gives us an understanding of what type of opportunity may be setting up not only on the indexes but on any instrument. Again, remember day 1, day 2, day 3, signal day, and also potentially targeting now building a box and whether or not we have a market that's in breakout or if we have a market that's range bound and just trading in a larger trading range. I know other traders will talk about trading the morning, the lunchtime, the nighttime, all these things, and I'm just looking at the New York range. And we have yet to break out until Tuesday. And Tuesday we close in breakout outside of our previous high of week level. And you'll also notice that if we project Monday's opening range across, that we have now had a range expansion. Tuesday expanded the range, even though we have smoke and mirrors in there. Until New York opened on Tuesday, we were still inside of that range. We've made higher highs on Asia and everything else, but our New York session has yet to expand that range until Tuesday, day 2, at which point we made a higher high and a lower low. Day 3 expands and blows off in the direction of our range expansion. on Wednesday. One thrust on CPI, a second thrust on our New York Open, and a third thrust in our 10 a.m. club, the beginning of a new 4-hour rotation at the weekly extreme. If we project the New York low day level across, we've broken outside of Wednesday's low of day level, but we're still inside of that weekly range. We can project this across. Again, I want traders to understand, are they working the high or are they working the low? And we break out early in the day. Breakout in Asia, peak formation low. We break down again prior to our New York session, pulling back, and we go down one more time, heading into PPI, at which point we had an explosive reversal on our smaller time frame, reversing back inside of the range. And our New York Open session traded higher before reversing. Now, real rationale, two things to remember is that we're Thursday, day 2, reversal day, but we may now also have traders trapped down low underneath of our low of day level, and we're about to start the 10 a.m. club, the new 4-hour rotation at a weekly extreme. Now, this is a 30-minute chart. This is our 30-minute chart, and on a smaller time frame, we had an early entry on PPI. We'll go down and look at that in a moment. But I want traders to also understand that this is Thursday. We have traders trapped down low. A lot of traders saw this as a first red day. And again, I mentioned a down closing day in a market that is making higher highs. So we've been moving higher, pulling back, moving higher, pulling back, and we're still in a market making higher highs overall. Coming back to my overall thesis that don't be trying to counter trend a market that's still moving strongly or in a direction. Until we're backside, this market is still making higher highs and higher lows. Now, this market could break down. But Thursday, we have a pullback day, and you can see, I want traders to really understand that when you counter trend this market, we have shorts in the market, and this market pulls back inside, those shorts are now trapped. We're on the daily time frame now. All opportunities come from the higher time frame when we're targeting a daily range. So if you catch yourself shorting, wanting to short down low or buy up high, be very, very sure that you actually have a trade set up and you're not chasing movement. Now, one of the ways to view a news catalyst with a setup like this is a 5-minute chart. On the opportunity was on the 1 minute right off the bat on PPI, but understand that sometimes the news will act like this in this particular case as the open of the market does. So at PPI, we have a short squeeze setup, at the low of week level. 3 pushes into our low of week extreme, our opening range, initial balance, a major red news catalyst, and an explosive reversal candle coming out of a short squeeze setup. Parabolic short squeeze reversals, low of week, high of week, low of day to high of day, page 90 in the playbook. The interesting part about our opening range and initial balance, which is something that traders may be paying attention to, is that we've formed a box. And interestingly, this box size is 249 pips or percentage points or 25 points, whatever you want to call it, 250 pips. So basically, a 250 pip box was formed in our opening range and initial balance. And that gives us some valuable information to understand risk reward, whether we're selling high or if we're buying low. Now you'll notice that this market traded back up through our high of week level from the previous week before obviously into the new day closing out and breaking down. Now, just to highlight the opportunity was the explosive short squeeze reversal at the low of week level on Thursday, day 2 on the backside of the week. Keeping things simple, nothing complicated, working from the extremes, level to level, whether we're selling high or we're buying low. If traders weren't sure about the level to take profit from or holding till close, this is still a 100% expansion of the range of our geometrical consolidation down low in the short squeeze setup to project 100% expansion as a potential profit target level. Set and forget opportunity on the NASDAQ. Just remembering that these opportunities will typically show up on the backside of a week, if we've built a larger box, and test this on your Dow Jones to see what opportunity that market gave traders today, another explosive reversal. So a simple process. Again, we had our high of week level. On Monday, we formed a low of week in the New York session. That market traded higher and made a high of week on Tuesday, day 2, our opening range and initial balance. We'll blow this up for traders. CPI explodes higher, and then our New York window opens, our 9:30 New York equity markets open, and the market proceeds to push higher before reversing just after 1 p.m. in the afternoon and pulling back inside of the range. Another example of selling high. The news acts as a catalyst, but then takes traders higher into the beginning of our New York session, as my friend Stephen would say, the trap and then the shift, taking traders into the extreme. Now, if we back this up, we can see the market auctioned down into the low of week level, creating that short squeeze opportunity. Now, one of the questions that traders need to ask themselves is, if you're getting in earlier, you're chasing a move or looking for little bars and minutiae and blocks and gaps and sweeps and hunts and everything else, is understanding the larger template and the opportunity that presents. If this market was going to break out, we could have had a collapse first on major red news, a pullback, and maybe a follow through in our New York market. But no, we didn't get that. We've now created the short squeeze, the creeping trend, as my friend Bill McLaren used to tell me. Creeping trends will resolve themselves in one of two ways: either an explosive reversal or a capitulation in the direction of the creep. Once this market reversed on major red news, that created the opportunity for the New York session open and the 10 a.m. club. Peak formation high made on major red news catalyst. Again, the trap on the New York open and the reversal. Pick a pin hammer. Any pin hammer will do. But understand that if this is an opportunity that's going to reverse and not come back, don't be trying to counter trend a market that is potentially now an ACB template day coming out of a parabolic short squeeze setup. Now, every Thursday we talk about these opportunities, and lo and behold, we get traders who are, caught like deer in the headlights, and it doesn't matter. What matters is, if it's not your setup, don't try to trade movement. But if it's your setup and you're hunting this was free cash on a reversal template on Thursday after major red news, sitting on your hands. So this is where traders get caught up. They're trying to predict and create little gaps and sweeps and hunts and biases and everything else. But a lot of traders are just sitting on their hands and waiting for these setups to present. A fantastic opportunity on the Dow 30. Now, I said a moment ago that these markets build a box and then they may break out. We talk about most breakouts fail. I talk about my friend Stephen a lot. My friend Stephen only trades reversals and not until after 10 a.m. So this is a 365 pip box. So that gives us a fantastic opportunity for asymmetrical risk reward if we're buying down low somewhere in this range, or if we're selling up high if that opportunity presents. We didn't see the NASDAQ go back to that extreme, but on the Dow 30, we saw a sell high opportunity later in the day. Now, traders are going to say that's out of their timing window, but there are traders who are hunting this specific setup. Rather than trying to trade the movement inside, they're waiting for the market to get to the extreme for that sell high opportunity if indeed it presents. Now, just because a market goes up high doesn't mean there's a sell setup. We had a CPI news release, and the New York Open took traders up high, trapping longs up high, and then, as my friend Steven says, pull the rug out and shift the market, drifting back into the low of week level. A short squeeze setup on the Dow 30. So reinforcing traders, sitting on your hands and doing nothing. A lot of the smoke and mirrors, gobbledygook and blocks and sweeps and hunts and all these other things are great, but where's the scalable opportunity, the one that's not going to come back? Keep things simple. Sit on your hands and identify the opportunities where you have a 90-10 edge in the market. Be patient, be disciplined. Impulse is your enemy. Impulse and FAFO are your enemy. Discipline and patience and confidence of knowing the setups that you're hunting give you the wherewithal to just sit and wait until those opportunities present. Mark Weinstein says, Although the cheetah is the fastest animal in the world and can catch any animal on the plains, it will wait until it is absolutely sure it can catch its prey. It may hide in the bush for a week waiting for just the right moment. It will wait for a baby antelope, and not just any baby antelope, preferably one that is sick or lame. Only then, when there is no chance it can lose its prey, does it attack. That to me is the epitome of professional trading. Now, just in closing, if we expand the range to where that sell high opportunity came from, just CPI went just beyond that, and our box becomes a 500 pip box. From 250 on the NASDAQ to 500 on the Dow, and the reversal template offered traders a trade back to our previous high of week level that we projected across. Fantastic short squeeze opportunities on both the Dow and the NASDAQ. Congratulations, traders. Keep things simple, repeatable, and scalable. And in between, do nothing to sabotage your good results. Keep it simple. Have a great day, traders, and may the markets go with you.